Friday, March 3rd, market analysis, Stan Ehrlich. Currently 10:20, a little later than I'd like to make my recordings, but I wanted to see how this follow-through would develop, which has done so. We have some very important breakouts to the upside in stock market indexes this morning. I like what I see very much. Now, you guys, if you got any questions, email me at info@ersignals, plural.com. You can see it in the upper right-hand corner of my screen. So email me, period. Right now, a little dip. After the spider got up to 403.25. Now that's important. Look at the daily data chart on the right. We have now made new highs for the last 8 days, today being the 8th day. That's a week and a half. After yesterday's lowest low for a month. So we just wiped out all of the price action. It's now below us for the last 8 days. Now it's support. Now, one comment, we do have a very small gap between today's low and yesterday's high. It's about 30 cents, I think. So it's not that big, but it's still a gap. And remember, gaps are like a black hole in space. They tend to suck the price action back into the hole. So the gaps are almost always closed. I would not be surprised if we came down a little bit below today's low, closing the gap and went right back up again. And that could be, well, I doubt it, but could be today. But, you know, in the next couple of days. Now, there's also there's a much more important gap at around 408 from a couple of weeks ago, and when the market gapped down on February 17th. That one is a couple of points in size, and I think we're headed right up to close that. There are 3 times the gaps. Real quick, I'll teach you. There's a breakaway gap, there's an exhaustion gap, and there's something called a common gap. Common gaps are common. They're in the middle of a trend, up or down. Breakaway gaps are like today's gap. They're breaking away from a top or a bottom. This is from a bottom, of course, I hope. And it's the least likely gap to get closed. Not that it won't. It's just that it's a little bit less likely. So we might leave this gap behind forever. So I'm bullish. I'm very optimistic. I'm liking this. You can tell it in my voice. We had an outside up day yesterday, bullish engulfing. Plus, we were almost oversold. I like 25 for my RSI oversold level. We were down to 25.54. At the bottom here, this is a custom relative strength index. I learned RSI from Wells Wilder himself in the 70s and 80s. So this is my custom version. And I've been using it for many decades. 52 years in this business. Now, let's look at the DIA real quick. Go to the index page. Daily data for DIA. Same big formation with a little variation to it since June, which was a giant head and shoulder bottom. And by the way, I should mention, I think the head and shoulder bottom on the S&P 500 is back alive again. Yesterday, I called it dead, and I think we got a fibrillator and brought it back to life. So it's now well above the neckline, starting to get stronger, quicker, better, and a new high for 8 days. I like that. We do have these exceptions once in a while, not very often, where the market does what it's not supposed to do, and then within a very short period of time, which could be a few days or even hours, it corrects the problem, which is what it's doing now. I need to stay here. I need to stay approximately where the prices are right now, and or higher, of course. So, benchmark. We're up almost exactly 5 right now on the spider. That's our little benchmark while we're talking. You keep your eye in the upper left-hand corner periodically, and you can see the net change real time. Currently 10:25 California time, Friday, March 3rd. Okay. Everything looks good right now. I like what I see. Let's go to the QQQ. Daily data on the QQQ. We just recently made new highs in the last 10, 20 minutes. We're almost high and last, and it is above all of the highs, and therefore also, of course, the closes for the last 8 days. Looking damn good. We opened a little bit below support yesterday and had an outside up day, bullish engulfing. Unfortunately, it didn't get oversold, and then it would have turned green instead. But it wasn't oversold, so I don't have an official ER buy signal, but it came awfully close to it, like the spider. The last fantastic bullish engulfing for a major bottom, long term, was on October 13th. I told you something like that could happen in advance. I told you before October about the October low likelihood, which has close to a 90%, 30 plus year history of being profitable and accurate and working. And it happened again, a whopper. It was the bottom of the 2022 bear market, and so far the beginning of the 2023 bull market. And yes, I think we're going to have a bull market this year. So I like what I see in the QQQ. No ifs, ands, or buts about it. We have to stay here. We can't go dropping like a rock. And my fail safe, get out of the market. No way would I want it to get below yesterday's low. Excuse me. From here, that's not really a very short move. So the risk from here is not the smallest. But on a very long-term basis, it's not bad. So, excuse me, being a buyer yesterday was, of course, the obvious thing to do. And we did get bullish engulfings, and we did get in some of the indexes the official ER buy signal, turning the daily data chart green on the E-mini ES miniature S&P 500. Also on the daily chart, on the micro mini, the MES, I like to call it MES, we also got an official buy signal, period. So I have gotten some great buy signals, but they're in the E-mini and the micro E-mini S&P. I'm not sure about other indexes. We could have gotten some there. I don't look at them necessarily all the time. All right. Bullish, obviously, looking for the beginning of a bull move here to make new highs for months soon, in the next week or two or three. This month, I would say. Futures. Yay. We've got the first chart, corn. I talked about it being oversold. I talked about it being below a support level, a downside breakout, but oversold. I talked about it rallying some, and it is. Now, I don't think the rally is going to carry up too much, up to maybe 647-ish, and that's not very far from where we are already at 41, almost 42. So there's 42 right now. Get ready to go short. I'll try to help you do that. It could be very soon. So next chart, and I'm bearish on corn. Next, cotton. We had a buy signal a few days ago, working just fine. I didn't like the bearish engulfing yesterday, but it wasn't overbought, so it's not that big a deal. Today, we're starting to come back up again. I need to close above yesterday's high, which is the highest high since the buy signal, and I think it's going to do it very quickly. I doubt today, but maybe early next week. So the buy signal looks like it's working fine in cotton. Next chart, wheat. Now, the sell signal we got about a week and a half, 2 weeks ago has been working great. We are short from approximately 171, give or take a penny or something. And we're now down at 17, and that's up a little bit from the lows. So, hey, no problems. We got oversold. I expect it to bounce. It's bouncing slowly. I'm looking for it to drop off very soon, probably next week, into new low ground. Next chart, bond futures. Very important because of the stock market. When this market chart goes down, it means rates are going up on a very short-term basis, if not maybe long-term also. But I got a buy signal that didn't work a few days ago, but they sometimes cluster group together within a week or two, 2 or 3 or 4 buy signals, 2 or 3 or 4 sell signals, and that usually causes the market to finally turn. Not all the signals are perfect. Most likely one of them is. This one wasn't, and very unfortunately, I didn't get a new low today, or I would have a bullish engulfing ER green buy signal. I think today's the start of an up move, signal or no signal, because of the oversold conditions, because of the support area. And I mentioned in the last several days that I thought this was going to come. Here we are. Next chart, live cattle, new short signal 2 days ago. A little bit stronger than I would have liked, but there's no official getting stopped out. We're still basically bearish. The signal is basically still good, and you would have a low risk at this point if you use the stop at 166 and change. So I would encourage, I don't want to use real strong words here. I was a broker 35 years, president of a forex firm, stockbroker, hedge fund manager, blah, blah, blah. I know the terminology. I'm encouraging stuff, but I'm not specifically, exactly recommending positions or trades. If I like the long side, obviously you know what I mean, and vice versa. And I like the short side here. Next chart. Got to have a sell signal. Next chart. 10-year notes. A little out of sequence, but oversold like the bonds for the last couple of 3 weeks. The implication here is it's about to turn back up, and finally I'm getting some evidence that it's starting. So I'm friendly now, officially looking for more strength, looking for this bond market and 10-year note market to develop a very big, long-term, major bottom. This could be, like bonds, the last low on a broad double bottom. There, I've said it. The day it starts up. Let's see how history proves me right or wrong. Next chart. Bought it at the bottom. Green buy signal in natural gas a week ago. That's why I'm built the ER signals strategy. It excuse me, it's available for TradeStation, soon for NinjaTrader, and different modules that apply to it, and a variety of other things as well. Next chart. E-mini. Like I said before, green, official green buy signal, point blank. My system is long. It fiddled around at or below the neckline, especially below the neckline. Usually doesn't happen. It did this time. But now, all of a sudden, today in particular, and starting a little bit yesterday, we're getting back up above the line, and I think we're on our way up. I think we're going to see in the next week or two new highs for the whole trend above 4,200. That's going to be a very significant bullish, intermediate to long-term bullish breakout. Next chart. Silver, gold, and platinum. All three have got bullish engulfing ER buy signals in the last 3 days or less. This one's working great. We have a new high close probable. We dropped off to my retracement bid and got filled, and we're on the way up today, making some money. Yesterday closed about break even. Looking great. You know that my trailing stops, protective stops, also called a stop loss order, move very quickly. In fact, with the trading systems I offer people, it moves on a 1 minute basis if needed. The stop is recalculated every 60 seconds. So in a matter of a very short 5, 10, 30 minutes, the stop may, and many times does, trap a profit very quickly. In fact, within the same day, frequently, that we get into a trade. Next chart is gold. What can I say? Buy signal 4 days ago. This is a new high and a new high close likely. Hey, nothing else to say. It's working perfectly. Next, silver. Again, the bottom of the market. Green daily price action. ER buy signal. Oversold in the proper number of look back days. And New high close likely. Great. Next chart. Cocoa. Okay, I'm getting to the charts and I really don't have too much to say, but if you see yellow on a rally, you're supposed to start going down, and we have yesterday and today. Again, nothing to say. Overbought twice now on orange juice coming down. Lean hogs. I'm going to leave you with that. You have a great weekend. See you on Monday. Profitable trading day to you. Thank you, Stan Ehrlich.